So it's November 2023, we're approaching the holiday season, and yet, real estate's still on everybody's mind. The most common question I get every day is, how's the market? So in this video, I'm going to tell you exactly what I'm seeing in the market, not only for the entire United States, but also right here in the South Jersey Shore. Hey, I'm Adam D with the Local Connect and KW Realty, and if you could please hit the subscribe button, that way you're alerted to the next video we put out just like this every month. So if you've watched my videos before, you know that inventory levels is the most important real estate statistic, and we are still seeing very low inventory or very few homes available for sale. Because of that, we have not seen a decrease in pricing. We've seen a slowdown in appreciation, but properties are still appreciating, maybe only by a couple points rather than double-digit appreciation like we've seen the last few years. As we head into the end of the year here, we know that we're going to finish the year about 25% down on total transactions. There's going to be less transactions overall, and that's where some of the real estate headlines are getting this news about a real estate slowdown. Well, yeah, there's less transactions, and mortgage lenders are going to have one of the fewest new loan origination years in history. Despite that, I've seen just about 3 multiple offer situations just this past week. So the market remains very competitive, still multiple offer situations. I think I'm seeing that more in the mid to lower price points. Some of the higher price point properties and luxury properties are hanging on the market just a little bit longer. But even then, every time I think something's overpriced or hanging around longer, I see it go under contract right away. So I know a lot of people told me they were waiting till the fall for all these properties to come onto the market. Well, here we are at the end of the fall, and it never happened. And to be frank with you, I don't know if it's going to happen in the near future either. I think that what we're seeing right now may be the new norm for our real estate market. Even interest rates actually have come down about half a point, give or take, the past couple of weeks because the Fed's announced that there was not going to be a interest rate increase. That being said, all the people that are saying they're waiting for rates to come down, I'd like to hear from you, what does that mean? Are you waiting for them to come down to 7%, to 6.5%, to 6%? Because I can certainly tell you, we're not going to see those 3% rates again, maybe ever, but at least for a very long time, unless there's some type of catastrophe to the real estate market. So if you're waiting for rates to come down, I don't know how far they're actually going to come down. Overall in the United States, more than 80% of the US has seen appreciation this year. So not just in our local market, most of the country is still seeing prices go up, despite what you might see on the media. So let's dig into the numbers right now and take a look at exactly what's going on in the real estate market. So I think Sean Dobson explained the market best right now. So I'd say whatever our forecast is, it has a wider range of error than normally would have. Right now, we're just at a point in the housing market to where I don't think anyone really knows, to tell you the truth, but we can't ignore that inventory remains down 40% since pre-pandemic. So exactly, nobody knows exactly where we're going, but what's dictating the market is inventory levels. So unless inventory levels change, we're not going to see a major change to the market. So I always like to look at, particularly for homeowners and buyers who you're competing against, how many showings there are right now in our area in New Jersey. And we can see that this orange line is 2023. We still actually have more showings going on right now, despite this dip just this past couple days here for whatever reason. That may just mean that they don't have all the data yet. But that being said, showings are still staying strong despite that there's fewer listings on the market, right? So we always have to take this graph into account for the fact that there are actually fewer houses available for sale despite the number of showings. So there's still very strong showings, a lot of buyers looking for houses right now. In Atlantic County, what we're seeing is, again, fewer properties available for sale, right? Average list to sale price ratio is over 98%. That's really strong. Median days on market, 19 days. Houses are selling quickly. Inventory levels have ticked up just a little bit, but no major changes, right? We have less than 3 months of inventory on the market. That still means that there's very little for a buyer to choose from. And if a seller, you don't have much competition, you're going to have a good time selling your house. Cape May County, we're seeing similar stuff despite higher prices, of course. Fewer properties on the market, right? Average list to sale price ratio over 98% again. Similar median days on market, 21 days. And month supply of inventory, a little bit higher right now in Cape May County, over 3 months supply. So, again, this is for the entire county. Every town's going to be a little bit different, but you're still at a low inventory level. Know that a neutral market is 5 to 6 months of inventory. So we're still very short of that. And we don't see as if there's some type of upward trajectory on inventory right now. It's even though it's ticked up a little bit, it's remaining relatively flat. So I was looking at this from Fannie Mae, and Fannie Mae interviews a consumer confidence, so they ask prospective home buyers if they think now is a good time or bad time to buy. So you can see that this bad timeline has really ticked up. I always find this a little bit ironic because if you had actually purchased a property during the bad times, it would be worth significantly more right now. And what we see with these lines is they constantly change based off of interest rates actually. And what the buyers are waiting for is for rates to go down so they can jump back into the market. The question becomes, is it possible that rates actually come down a lot? I think they'll come down a little bit, but this may be the new norm of the market right now. We may not see a 5% or let alone a 4 or 3% we're never going to see again. So you start to think about the fact if you're waiting for rates to come down, how long are you going to wait, and what would the expectation be? If you waited and they went down 1/4 of a point, is that what you're waiting for? Are you waiting for them to go down a full point or even more? Talking about that, we actually saw rates peak just around 8% in October, and they've actually come down, give or take, about 1/2 a point or so since then. One of the primary reasons why is because the Fed news, which we expected, came out that they did not increase rates at this most recent meeting. So we'll continue to monitor this now. We did see, just personal experience, boots on the ground, a lot of buyers actually jumped back into the market as soon as this 1/2 point decrease happened, because a 1/2 point decrease makes a big difference on a mortgage payment right now. So I thought this was interesting. Redfin reported that 1 in 3 U.S. home buyers are paying all cash, highest share in nearly a decade. So we're seeing a lot of cash sales. A lot of people have a lot of equity in their house. Even if they were forced to sell, they probably have enough equity that they could sell, cash out, and buy their next house for cash as well. Again, barring some type of catastrophe to the market, which we just don't expect to see to happen right now. Now, mortgage rate projections again, we took an average of all the big economic data here, and what we're looking at is that the trend, and the experts still think that rates are going to go down a little bit, maybe even a full point heading into the end of next year. Nobody knows if this is actually going to happen, but I think what we're seeing here is if you think that rates are going to go back down to that 5 to 3% range, it's nearly impossible that's going to happen unless there's some type of major economic change, extreme recession, that the Feds would have to come back in and manipulate the market again and start buying, treasuries and mortgage-backed securities again. So it would take a really big change for that to happen, and we just don't think that's going to happen right now. But a lot of experts do think that the rates are going to come down a little bit, and it's because of this treasury spread, they call it, that there's almost a 3-point spread right now between the 10-year treasury and what mortgage interest rates are. And ordinarily that's closer to 1.5 to 2 maybe. So there's some risk built in to the market right now, and if confidence increases, then that 3% will go down, maybe closer to 2%, and we'll see a nice little, dip in interest rates if that were to happen. And that's why, I think that these different agencies are expecting this decrease in interest rates. So we'll see what happens. So there you have it. That's exactly what we're seeing for the November 2023 real estate market. So what I'd invite you to continue thinking about is, if you're somebody who's waiting for interest rates to go down, start to think about what would cause that to happen, how much they would actually go down, and what would be the negative consequences by waiting. Because a lot of the experts believe they might come down a little bit, but I don't think they're going to come down to that 5%. Or 4 or 3%. I don't think they're coming back down to anywhere near that. If you like these videos, please hit the subscribe button. That way you're alerted to the next video that we put out every month. I'm Adam D with Keller Williams, and I'll see you on the next video.